You're welcome again. Following are the business transactions of Miss Shruti. Okay, transaction one is Shruti commenced business with a capital of 2 lakhs. Okay, so cash comes in, right? Cash account debit to capital account. Who is giving? Shruti is giving. So Shruti's capital account is credited. Okay, 2 lakhs, 2 lakhs. Second one, plant and machinery purchase. Machinery is coming, debit what comes in. Plant and machinery is coming, debit what comes in. And what is going out? Cash is going out. Look at this. Cash is going out. When this is mentioned, you don't need to remember the name of the company. Okay. If this cash is not there, then you would have written Indian Machinery Company because the cash word is there. So you'll simply write plant and machinery debit to cash. Okay. 20,000 and 20,000. Okay. So next is purchase furniture, 5,000. Furniture comes in. Okay, furniture comes in. Is there cash? No cash is mentioned. Is there a person who is selling this furniture to us? No name of the person. So when there is no name and there's no cash, it is implied that it is for cash because there's no name mentioned, right? So furniture is coming, debit what comes in, cash is going out. Okay, 5,000, 5,000. Next is bought goods from Srinidhi. Okay. Now here there is no name, but no cash also, but we understood it as cash. In the next one, D, bought goods from Srinidhi, 30,000. Okay, 30,000. So Srinidhi name is given, there's no cash. Therefore Srinidhi is a giver. And we are purchasing. Purchases debited, expenses debit to Srinidhi. Purchases to Srinidhi. 30,000, 30,000. Next is goods purchased, 20,000. It is simply purchased, no cash, no name mentioned. So purchases account debit to cash because it is implied as cash because there's no name mentioned. Next is it is cash sales, cash sales. Okay, cash sales, cash sales. Okay, cash sales, right? 50,000. Cash sales, 50,000. Cash comes in when you sell goods to sales. Okay, to sales. 50,000, 50,000. Right? Next is salary. Salary paid. Salary is an expense and it is paid. Okay, salary is an expense. Salary is expense, debit. Okay, to cash, right? For 5,000 or 50,000. What is the amount? I'm sorry. What are sales and cash sales? Cash comes in and sales is credited 50-50. Salary, expense, debit to cash paid. Okay. Next is rent paid, expense, debit to Rachita. Okay, it's already paid. What is paid? Cash is paid. Cash is paid. Rent account to cash. Rent to cash for 4,000. Next is commission received, income credited. How it is received? In the form of cash. So cash to commission. Okay, 10 and 10. Next, wages paid, 3,000. Wages is an expense, debit, and it is paid in the form of cash. Cash goes out, credit. So 3 and 3. Okay. So for all, you might have given the narration, right? Being business started, being plant purchase, being furniture purchase, being goods purchased on credit, being goods purchased, being goods on sold on credit, okay, being goods sold, being salary paid, being rent paid, being wages paid. This is how you have to give the narration. Okay, from this you have to make out how many accounts you have to prepare. Cash account 1, capital account 2, Plant and machinery account 3, cash is already prepared. Furniture account 4, cash is again prepared. And purchase account 5. Okay, Srinidhi account 6, purchase is already done, cash is already done. Okay, Ankit account 7. Okay, then sales account 8, cash account already done, sales done already, salary account 9, rent account 10, because cash and cash are already done. Then commission account 11. Okay, wages 12. 12 accounts we had to prepare, right? 12 accounts we had to prepare, right? This is how we have to make out that these many accounts are to be prepared, right? How are we preparing the accounts? This is how we are preparing the accounts. Yeah, look at this. These are the accounts, right? Cash account debit to capital account when you introduce the capital. Okay, this 2 lakhs. And similarly, there's a sales cash account debit to sales 50,000. And we have received commission also in the journal. Okay, cash account debit to commission. So these are our incomes. Okay, cash receipts. So 2 plus 50 plus 6, 10, 260 is the cash debit side. Cash credit side, we paid 20 for machinery purchase, we paid 5 for furniture purchase, we paid 20 for purchase of material, we paid 5 for salaries, we paid 4 for rent, we paid 3 for wages. So the total amount is 20 plus 5, 25 plus 20, 45 plus 5, 50 plus 4, 54 plus 3, 57. 57. Okay, so 260 is the total. Okay, and on the debit side, on the credit side, 57 is on the credit side. So the difference is 2 lakhs, 3,000. The highest total we have taken on both the sides. So the difference or balancing figure is 2 lakhs, 3,000. Okay, Shafwan, are you there? Shafwan, are you there? Yeah.
Sir, can we use calculator in the exam?
Yes, you're allowed to use the calculator.
So, is there any time period for that, sir? For using calculator or for the entire exam?
As of now, 2 hours. Okay. Presently, it is 2 hours. Okay. And maybe it may change if the situation improves, and we'll go back to the normal timing, 3 hours. Right. So 2 lakhs 3,000 is a balancing figure. What is this? This is the cash balance. This is the cash balance. Okay. So debit side is more by 2 lakhs 3,000 than the credit side. Okay. So this is brought to the next year, next accounting period by writing to balance brought down. Again, from here, the transactions go on in the next year, right? So let's come to the capital account. Please check your solutions also, okay, with my answers. Then capital account. Capital account, okay, when we have introduced the capital, okay, cash came in, cash account, capital account is credited with cash of 2 lakhs. Nothing on the debit, so carried down, balance carried down 2 lakhs, right? The same is brought to the next year as by balance brought down. Next, plant and machinery. Plant and machinery is bought for cash. Plant and machinery debit to cash 20,000. Nothing on the credit side, so therefore by balance carried down 20,000. Likewise, furniture account debit to cash account 5,000. Nothing on the credit side, and therefore by balance carried down 5,000. Okay, and the balance is brought to the next year. Next, purchases. So you purchased 20,000 for cash and 30,000 for credit from Srinidhi, right? So total amount is 50,000, right? So, and nothing on the credit side. So therefore, by balance carried down, carried down. Okay, that's 50,000. 50,000 is brought to next accounting period by writing to balance brought down. Okay, so Srinidhi account, Srinidhi, how much worth goods you have sold? Srinidhi account, yeah, by Srinidhi, right? Okay, if it is debited here, it should be credited in Srinidhi by writing by purchases account, purchases account. Okay, this is mistake here. So by purchase account, in purchases by Srinidhi, in Srinidhi by purchase. Okay, in purchases to Srinidhi, sorry, to Srinidhi, in Srinidhi by purchases. The amount is same, 50,000. I'm sorry, 30,000. 30,000. Okay, and same 30,000 will be written here. Okay. All right.
The brought
Sorry.
down also 30,000. By brought down, sir.
30,000. Yes, good. Thank you. Right. So 30,000. Right. So actually, this is the amount. Nothing on the debit. And look at this. This is another mistake. Right. It is 2. Okay. This is assignment already done by somebody. Student like you. Okay. So these are the mistakes that he or she has committed. All right. So Srinidhi account, in that by purchases 30,000. That's the actual amount. Nothing on the credit. So therefore, to balance carried down 30,000. Same thing is brought to the next year by balance brought down 30,000. Next, Ankit. Ankit account. So Ankit, to Ankit, you sold goods worth 60,000, right? So Ankit account debit to sales 60,000. Nothing on the credit side. Okay. So 60,000 is carried down. And the same is brought to the next accounting period, 60,000. Is it 60,000 correct? Is it 60? Ankit, where is Ankit? 60,000. Yes, Ankit, 60,000. Yeah. So, right, 60,000. 60,000 is brought down to the next year. Okay. Next, sales account. Sales, we have two types of sales. There's a cash sales of 50,000 and credit sales to Ankit, 60,000. Total is 1,10,000 on the credit side only. Nothing on the debit side. So therefore, to balance carried down 1,10,000. Okay, 1,10,000. 1,10,000 is the total. Okay, right. And the same thing is brought to the next accounting period, right? By balance brought down. Next, salary account. Okay, salary. The total amount salary account debit to cash 5,000. Nothing on the credit, so carried down. And same thing is brought to the next accounting period to balance brought down. Okay, rent is also like salary, debit to cash 4,000. Nothing on the credit, so therefore to by balance carried down. Same thing is brought to the next accounting period, 4,000 to balance brought down 4,000. Commission is an income. How did you receive? By cash. So therefore, by way of cash. By cash, 10,000. Nothing on the debit side. Therefore, to balance carried down 10,000. Okay, the total is 10,000, 10,000. The same 10,000 is brought to the next accounting period by writing by balance brought down. Next, wages. Okay, wages account. Wages account debit. Wages account debit to cash account, same 3,000, nothing on the credit side. So therefore, by balance carried down 3,000. And what is closing on the previous year will become opening for the next accounting period or year. So to balance brought down 3,000. Carried down closing, brought down opening. Okay. So this carried down, brought down can be on any side. It can be on the debit or credit side. Following ledger accounts to be prepared in the books of Ms. Shruti. This is with the adjustments. I'll teach you the adjustments in the next class. Okay. So these are the accounts, ledger accounts you have to prepare without adjustments. Okay. Right. What is the summary of cash account? This is the summary of cash account. What is the summary of, or you can say, yeah, when it is brought down, you just check the brought down. Only brought down balances you check. Only brought down. Okay. So this brought down is 2,03,000. Brought down is on the debit. Cash account shows debit. Next account shows brought down on the credit. Capital account shows credit balance of 2 lakhs. Okay, right? Then look at this. Yeah, cash account shows debit balance of 2 lakhs. Capital account shows credit balance of 2 lakhs 3,000 cash account. 2 lakhs is the capital account, right? Next, capital is over. Plant and machinery, debit balance of. Are you able to hear me? There's an internet, weak internet. Are you able to hear me? Are
Yes,
you
sir.
able to hear me?
Yes, sir.
Okay. So it shows weak internet. Right. So there's a debit balance of 20,000. Debit balance of 20,000. Right. Look at this. Plant and 20,000 debit balance. Next, furniture. Furniture debit balance of 5,000. Look at this. Brought down balance. Okay. Brought down is on the debit side. So 5,000. 5,000. Next, purchases, debit balance of 50,000. Purchases. Okay. Purchases, debit balance of 50,000. Next, Srinidhi account. Srinidhi account, credit balance of 30,000. Credit balance of 30,000. Srinidhi. Okay. Right. Then sales account. Sales account. Look at this. Sales account, credit balance of 1,10,000. Sales account, goods sold means sales account, 1,10,000. Okay. Next is rent account. Rent account, debit balance of 4,000. Okay. Rent account, debit balance of 4,000. Okay. Next. Next, commission account. Commission account, credit balance of 10,000. Okay, 10,000. Right. Yeah. Right. Where is that? Rent account, debit balance of 4,000. Commission 10,000. Look at this. Yeah, 10,000. Wages, debit balance of 3,000. Lastly, that's it. Wages, yes. So if we take the total of debit, which is 350, should be equal to the credit of 350. It should be equal. This is the total. Then if this total is equal, then what you've done is right. So whether what you've done is right or wrong, to know that, you just take the totals. If this is correct, then your balance sheet also will tally. Look at this. Balance sheet and profit and loss account. Okay, profit and loss account. Profit and loss. What do you take on profit and loss account? You take all the expenses from the trial balance. What are the expenses here in the trial balance? What are the expenses here in the trial balance? Yeah. Expenses here. Identify. Expenses.
Furniture purchases.
Expenses, purchases, salary, rent, wages. Incomes, sales. Where is sales? Goods sold, sales and commission or incomes. That's it. Sales 110, commission of 10, 120 is the total. Debit side, purchase of 10,000, salary of 5,000, rent of 4,000, wages of 3,000. Okay, this total is deducted from 120 and you get 58,000, which is net profit. This net profit is taken to the balance sheet like this. In the balance sheet, what do you take? You take the assets and liabilities. Okay, what are the assets? First, liabilities. Look at the liabilities. Capital is liability. Okay, capital is liability. Incomes we have already taken. 110 plus 10 we have taken. What is left over? Left over is 2,30,000. Okay, 2,30,000. Okay, so 2 lakhs is capital and liability. I'm sorry, creditors are 30,000. This we will take here in the balance sheet. 2,30,000. And bring this profit of 58,000 added to the capital. Okay, then let's come to the assets. What are the assets? You have furniture, you have machinery. Anything else? Any assets? Cash also is an asset, right? Cash also is an asset, right? So cash is an asset, right? Then machinery is an asset, furniture is an asset. Purchase expense taken in profit and loss account. Ankit, it's taken there. Where? Ankit, debtors, right? Ankit, debtors, it's an asset, right? Next, salary expense already taken in profit and loss account, right? Rent expense taken in profit and loss account. Commission already taken in profit and loss account, right? Then wages is expense already taken, right? So what are the assets now identified? Cash is an asset, machinery is an asset, furniture is an asset, and debtors of 60,000 is an asset. Look at this. It's like this. Plant 20,000, furniture 5,000, Ankit, which is debtor 60,000, cash balance of 2,03,000. The total comes to 288, which is equal with the liabilities. So the liabilities amount 2 plus 30, 230 plus 58, 288. Okay, here also 230, I'm sorry, 203 plus 60, 263 plus 20, 283 plus 5, 288, 2,88,000. So balance sheet got tallied. The assets and liabilities got tallied, matching. Okay, they are matching. Balance sheet should tally. Why it should tally? You cannot spend more than what you have. You cannot spend, again I'm repeating, you cannot spend on these things more than what you have. What you have is 288. Okay, you went on spending on plant 20, on furniture 5, and for debtors 60. And you're left with 2,03,000 cash in hand. This is how the balance sheet should tally. Any doubts?